Should your business be taxed as an S corporation if you also have a job where you receive W-2 income? That is going to be the topic of this video. And here's a quick spoiler alert. Your S-corp could be costing you money instead of saving you money in the following sort of scenario that we're going to get into in the video. So in order for me to explain this, I first will have to touch on a few things. So I'm going to discuss what are your taxes that you pay as an employee working, for an employer somewhere. And we're going to compare that to what it's like, or what taxes you pay rather, when you have a business that's taxed as a sole proprietorship. And then we're going to bump that up against what taxes you pay if you have a business taxed as an S corporation. And then we're going to talk about what happens when you're both an employee working somewhere and you own a business, and the impact of having a high-paying W-2 job combined with an S corporation together. So if this is your first time watching, my name is Navi Miraj. I'm a CPA that helps real estate professionals around the country save thousands of dollars in taxes. So that's real estate agents, realtors, and brokers. But if you don't have, or if you're not a real estate professional, stick around. This is going to apply to your business as well. So let me just lay the foundation briefly. So I recently created a video where I talked about 4 reasons in which you should not be taxed as an S corporation. And just as a quick sort of recap, those 4 reasons were, number 1 was you don't quite make enough profit in your business for the S corporation to make sense. The second one was you have large amounts of W-2 income and you also have a business, and that's the topic of this video, so we're going to explore that further in this video. The third one was that you live in a state that doesn't recognize the S corporation or perhaps taxes it quite heavily. And the fourth reason was you shouldn't have passive income within an S corporation. So specifically, I'm talking about owning rental real estate where you have rental income that shouldn't flow through an S corporation. And so again, this video is taking a deeper dive into the second reason, which is you've got high amounts of W-2 income and you own a small business. So in order for me to explain this, as I said, I'm gonna have to talk about quite a bit. Here's sort of a warning, I'm gonna try to my best in all my videos to explain something in a very easy way for everyone to understand. But this topic is a bit challenging, but I've laid it out in the best way I think possible to explain this scenario. So if I've covered a topic in depth already that's sort of in this video, I'm gonna either link that video so you can get a better and deeper understanding of what I'm trying to explain there. If not, I'll do my best to sort of recap it here as I'm going along. So let me just explain the taxes you pay as an employee, okay? So I'm saying you don't have a small business, you work for an employer, and you're earning, W-2 income. So what taxes do you pay? So in this scenario, I'm saying that you have quite a high salary. It's, in this example, $142,800. And I picked that number for a reason, and I'll explain why in a second. So what taxes do you pay as an employee? Well, as an employee working for an employer, you're gonna pay Social Security taxes. That's on your paycheck as FICA taxes. That's 6.2%, right? So the 6.2% times this amount is $8,850. You also pay Medicare taxes of 1.45%. So again, the 142.8 times the 1.45 is this 2,070. So in combined, in FICA taxes, you paid $10,920. Now, what you don't realize is when you work for someone else, your employer, who you work for, is also paying into Social Security and Medicare for you. I should say really for you, but they have to pay these taxes, okay? And so your employer is paying this, but you don't really see that as part of your paycheck. On your paycheck, you just see these contributions because these amounts are being withheld from your gross pay and being put towards Social Security and Medicare for you, okay? Now, also, when you're an employee, you'll see other withholdings from your paycheck, and those are usually federal income tax, that's what FIT is here, and state income tax, and I'm calling that SIT, right? So you're gonna pay your federal and state income taxes, and those are gonna be withheld from your paycheck based on how you completed your W-4 form when you started working there. dictates how much they're going to withhold from your paycheck. And, depending on what tax bracket you are in, it'll be anywhere from 10 to 37% of your income is withheld from your paycheck. At the state level, for state income tax, if you live in Florida like I do, then we don't have state income tax, so you don't pay anything. But if you live in a state like California, you might pay upwards of 13%, again, depending on what tax bracket you fall into. So, all right, that's explaining what taxes you pay as a employee working for an employer. Now, let's separate that for a moment. Let's say you didn't work as an employee anywhere and you had a small business, right? What taxes do you pay as a sole proprietor? So a couple things I want to note is, I mentioned a moment ago that I chose 142.8. I did so for a reason, is because this is what the IRS calls your wage base in the year 2021. So what that means is, after you make your first 142,800, any money you make after that, you don't have to pay Social Security taxes on. So the employer doesn't, and you don't either as the employee, right? So if you continue to earn more and more money, you wouldn't pay any more Social Security, but you would continue to pay Medicare taxes, okay? So let me now transition to, you're not an employee and you own a small business, so you're taxed as a sole proprietorship. So in this example, I'm saying you have the same amount of money, but in profit, right? So you might have actually had revenue of, let's say, $182,800, and then you had $40,000 of business expenses, like, as I've taught in my other videos, hiring your children and mileage deduction and what have you, which brings you down to 142.8, okay? So you're a sole proprietor with $142,800 of profit in your small business. What taxes do you have to pay? Well, when you're a sole proprietor, you're now the employer and the employee, right? So you have to pay all of this. You have to pay the 6.2% on the employer side of things, the 1.45% for Medicare on the employer side of things, and again, you pay those amounts as the employee, right? So if you add this up, it's close to $22,000 of taxes that you have to pay. Now, there are some deductions. It's a small amount that you get for some of these self-employment taxes. So you won't pay exactly this amount, but it's fairly close to this, okay? And let me just say something real quick. If you're a tax professional watching, I understand that you pay a little bit less than what I'm explaining here, but I'm trying to keep this video simple for the average viewer. I also know that in a moment, the additional Medicare tax is gonna kick in, but again, this is for the average viewer, which is your average small business owner watching my channel. So, okay, so now you understand that you have to, as a sole proprietor, so you could be an LLC taxed as a sole proprietorship, or you could just be doing business as, John Doe's Landscaping. You're gonna be taxed as a sole proprietorship. You gotta pay both sides of this, okay? And so if you add this, and this all equates to 15.3%. And if you do the math, 142,800 times the 15.3% gets you this number, okay? So in terms of income tax, you're gonna pay the same thing, right? You had 142,800 in profit. You're gonna pay income tax on that profit, but you're also gonna pay, the what's called self-employment taxes as a sole proprietorship. See, I don't know why the IRS really does this, but when you're an employee, they call these FICA taxes, but as soon as you start your own small business, it's not called FICA taxes anymore. It's called self-employment taxes, okay? So let me now explain what happens if you have a small business, and that's all you have is your small business, and you wanna form an S-corporation to use the strategies that I've kind of taught on my channel about how to save a bunch of money in self-employment taxes when you're an S-corp. So in this example, again, you may have had $182,800 in revenue. You had about $40,000 worth of expenses, and so you're left with a profit of $142,800 in your S-corp. Now, again, the S-corporation is a strategy to save you money in self-employment taxes. So what would happen is, with this profit, you'll split off the profit into two buckets. One will be a salary that you pay yourself, and the other you'll take as a distribution. And so what's happening here is, as an S-corp, you are the employer still, but you're going to pay self-employment taxes on the portion you paid yourself as a salary. So in this example, I'm saying, let's take 40% of this number and pay you a salary. The 60% we'll take as a distribution from your S corporation. And so you'll notice here that the distribution that you take doesn't pay self-employment taxes at all, which is great. And the salary portion does have to pay these taxes again. So now with the S corp, you're now the employer, right? And you're the employee of an S corp. So you're going to pay 57,000 and change times the 6.2% in the employer portion of Social Security taxes. Same kind of thing, 57 grand times 1.45. And so you're paying that amount in Medicare taxes on the employer side. Then you're also the employee. So you're going to pay those same amounts as the employee, right? So this is why people talk about the S corp so much, right? And so, if you have a business making this kind of profit, as a sole proprietor, you got to pay, 22 grand in self-employment taxes. Whereas here as an S corp, you only have to pay, almost $9,000 in taxes, right? So, you can get a $12,000, tax savings by, being taxed as an S corporation versus a sole proprietorship. And so, it's quite obvious that you would probably want to be taxed this way. So that's why there's so many videos promoting the S corporation all over YouTube and a bunch of articles written about it, right? If given the scenario to pick from this versus this, your federal income tax and your state income tax is the same, right? No matter which one you choose. But when it comes to these self-employment taxes, well, I'd rather pay, the $9,000 versus the $22,000, and I'm sure you would too. But what they don't explain in those videos is how does this all work together, sort of in conjunction with large amounts of W-2 income, right? And so now what I'm going to explain to you is what happens when you have a high paying job like this, this is a dollar amount that you're earning, and you also have a sole proprietorship type business, okay? Well, what happens here is, as I mentioned, that's why I kind of touched on the wage base earlier in the video, is that once you hit this amount, you don't have to pay into Social Security anymore, right? So you're not going to pay this almost $9,000 here or this $9,000 here. You'll just pay sort of the Medicare portion, right? And so you get a lot of that refunded back. Almost all of it will get refunded back. Not the full 22,000, but specifically the Social Security is going to get refunded back to you. But so what happens though if you are an employee somewhere earning a high wage and you also elect to have your business taxed as an S corporation? Well, what happens is you'll get the employee portion refunded back to you when you file your tax return, but what you won't get refunded back to you, and the point I want to make here is the employer portion of this Social Security taxes, you never get that back. That's gone, okay? So in this example, I'm saying, hey, that's $3,540 that you're never going to get back, whereas here, you're going to get these large chunks of money back, okay? So let me summarize what my point is. If you're a high wage earner, having a side business, taxed as an S corporation is likely costing you money, not saving you money. So in this example, the S corp will cost you $3,540. But keep in mind, you also have additional costs associated with the S corporation, right? So the tax prep fees for an S corp, if you're working with a competent CPA or accountant, they might charge you almost $1,000 to prepare this tax return. And again, I mentioned that you're going to have a payroll company, since you'll be issuing payroll to yourself. That might cost you about $500 for the year, right? So when you add all that up, your S corporation could be costing you about $5,000 in additional fees or taxes each year, right? So this happens all the time, more than you think. I know some of you watching this and you're like, hey, I don't have this issue. I don't have high W-2 income, but let me give you some examples. This could be here a physician, working at a hospital, earning a high salary, but they also do what's called moonlighting on the side, and they earn other income that's paid to them via like a 1099. They're an independent contractor. And so they might elect this strategy, but it's going to cost them money in the long run. Another example is, you have a high paying job and you sell real estate on the side. That might be an example where this is happening to you. Or you could be an IT consultant. Generally, IT consultants or engineers, for example, have a high W-2 income salary. And if they also have a small business and they're taxed as an S corporation, it may not be making sense for them, right? So does the S corporation ever make sense when you're also an employee, right? That might be a question that you might have, right? And so the answer is yes. If your W-2 wages are, I would say, less than about $100,000, then this is probably not going to be an issue for you, and you can, continue to be taxed as an S corporation. Or if your wages are higher than the wage base, 142.8, and you have a very, very highly profitable business, like for example, let's say the profit was maybe $250,000 in profit, then believe it or not, the S corporation actually starts to make more sense for you, because there's another type of tax I didn't put in here called like the additional Medicare tax, and topic for another day, but basically that starts to make sense again, okay? So the S corporation might make sense if you have a high wage and you have a high amount of profit in your business as well. I just want to, sort of tell you one more time that the federal income tax and the state income taxes are going to be the same across all of these scenarios, right? The topic of this video is really the, FICA and self-employment taxes I explained earlier. So I hope that was informative. I know it was a lot of information for some of you, especially if you're hearing this for the first time. But the takeaway should be, hey, there are scenarios where the S corporation doesn't always make financial sense, right? And so in this video in particular, the scenario was if you have W-2 income and you work for someone and you have a high salary of $140,000 or more, and you also want to tax your business as an S corporation, it may not make sense. That's the big takeaway here. So again, I plan on producing the other two videos regarding those remaining 2 reasons why you shouldn't be taxed as an S corporation. So make sure you subscribe so you can catch those as they are released. And if you'd like to contact me, and if you're watching this on YouTube, all of my information is in the description below. If you're watching on some other social media channel, I'm sure if you click on my profile or my bio or what have you, you can find me, or if you could just visit my website, it's navimurajcpa.com. I appreciate all the comments and feedback I've been getting. Some of you have been shooting me emails. Do subscribe, and I'll see you in the next video.